All right, everybody. Ladies and gentlemen, let me just quickly check my technicals here, but it seems we are good and running. So hello and welcome everybody here to us at Nadex. My name is Philip and I will be your presenter for today's webinar. Today we want to talk about an advanced strategy for trading liquid markets as we find them here at Nadex. Looking at your webinar interface, you should see that small questions box. And right now, I would appreciate a very short yes or why in that box to just let me know that you guys can hear me well, that you have seen those screens changing. And let me just change to the first risk disclaimer. Perfect, guys. Thank you very much. Really appreciate the feedback. Guys, if you happen to have questions, please put those questions into that box. And I do my very best to answer your questions as we move through the webinar, which is scheduled to run for around about half an hour. And of course, before we get started, you already do see those first risk disclaimers. I have to make you aware of those. So please take a moment of your time to read through them and make sure that you're okay with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk. And you should understand those risks and the instruments you're using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are always just shown for educational purpose, so please make sure you're okay with that before continuing with the webinar. And that being said, let's have a look at the Nadex risk warning too. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, today's webinar is brought to you both by Trade with Position and Nadex. So I would like to kick off with a very brief introduction of those two companies. I'm running those webinars for Trade with Position. We have been founded back in 2006 by Nick McDonald. If you don't know him, maybe Google him, have a look at his history and his career as a trader. And yeah, he was just happily trading his own account when his broker back in the day reached out to him and said, Nick, obviously you know what you're doing. Couldn't you please teach our other customers the way that you are trading? If you think about it, it's a win-win situation. Brokers, exchanges make money by people trading with them at their exchange. And yeah, they only do so if they are successful traders. Otherwise, the money is gone, the traders are gone, and nobody has any benefit of that. So providing trading education really is a win-win situation. And this is how everything got started back in 2006. We have been providing international trader training for clients of global brands, including exchanges and brokers worldwide since then. And our partnership with Nadex from the educational side started back in 2011. By now you will have realized that I'm not a professional presenter. I'm sorry about that, but I'm a professional trader, which means I'm trading those very same markets that you guys are trading. I'm using the same strategies that I show you here and show you here today in this webinar. And this is true for all of my colleagues here at Trade with Position. We are a company run by traders for traders. And we approach trading from a very strategic point of view. We have trading strategies, and those strategies are the blueprint that we want to follow. They give me that recipe that I want to implement in the markets. And therefore, I don't really care what the market is. I don't care what the time frame is. I just check my recipe, and if all the stars have aligned and everything is looking really well, then is it that I want to, it's looking really good, then it is that I want to implement that trade. Nadex is, of course, a derivatives exchange subject to regulatory oversight by the CFTC, newly formed in 2007, based in Chicago, just like all the big other powerhouses in the financial markets, financial heart of the futures and option market. All contracts are settled in cash, no physical delivery, so you don't have to worry about those contract specifications and which market does give you physical delivery or financial delivery. Here with Nadex, it's always that those positions are settled in cash. Very big advantage, ease of mind. You can focus on the charts, on the markets, on your trading. That physical delivery risk is gone. You have a wide range of global markets to trade, different instruments to also trade those markets. Here we have binary options and spreads. That's something new coming up as well, so please stay tuned in this area as well. Today's agenda, the advanced technical analysis tools that we use for trading the markets. And we want to focus today on trend analysis, multiple time frame analysis, support and resistance, pivot points, Fibonacci levels. And those are just ingredients. We want to combine those ingredients into an advanced trading strategy. And we want to close the session with some ideas how you guys can take your trading further here at Nadex. Guys, we only have about half an hour here today, and everything that we want to cover here is really just a really high level bird's eye view on those topics. Please, we have a advanced webinar coming up. I think it's scheduled for January next year. And please, everything that we cover here today can be covered with much more detail then. So if we don't have the time to really dig deep today, then please stay with me and pay close attention to the upcoming webinar schedule. Much more time to discuss those things up then. Let's get started here with some advanced technical analysis tools. And please don't take advanced for something which has to be rocket science. Advanced is something which is robust. Advanced for me means something which gives me an edge in the market because it's probably some kind of leading indicator, some idea, giving me an idea about what the market might be doing next, not telling me something about what happened in the past. It's really all going towards the future, what will be happening next. RD is asking me about a certain association with some kind of company website. I don't have a clue what that is. So RD, I can totally tell you, no, my only association is here with Traders Position, running those webinars for Nadex. I hope that helps that answer. But thanks for the question. And guys, quick reminder, if there are questions, please let them keep them coming. So first and most important of everything that we do when looking at charts is we want to understand what is the market currently doing. What is the market doing? What's the big context that the market is giving me? And for me, this is always which kind of trending environment the market is in. So simple as that. Either it's an uptrend, it's a downtrend. Many people will stop there, but it's equally important to understand that there might be also no trend going on there as well. And my strategies are usable and give me the best edge and best advantage when we are in a trending environment, and therefore we want to focus on those trends. Uptrend, once again, you don't need any fancy indicators for that. No subscription model, no nothing. You just have a look at the highs. And it's not important if this is rather the high than that. What's the big picture here? Obviously, we have higher highs. At the same point in time, we have also higher lows. As long as I get some kind of higher highs and higher lows, this means the market is in an uptrend. Very surprisingly, the downtrend is just defined in the same way. We have lower lows and lower highs, and as long as the market is giving me those clear lower lows and lower highs, this is what defines a downtrend for me. I don't care about indicators, regression lines, and so on. Lower lows, lower highs, good enough for me, that's a downtrend. And if I don't get that defined, clear-cut series of lower lows and lower highs, or higher highs and higher lows, if the market is doing something crazy, crazy can be funny, but crazy is not predictable. And for that reason, if it's not predictable, what do I mean by predictable? Predictable means not I know for sure what's going to happen next. This will never be the case with trading. Predictable means for me, it's more likely that prices will keep on going higher than prices will go lower. It's more likely that prices will go lower, that this momentum that has been in the market will continue towards the downside, than that we will get a trend reversal. Could still be the case. It's still, anything can happen in the markets, absolutely anything. But it's just about probabilities. And here, I don't have an idea about those probabilities. I don't know what's going to come next. Higher high, higher low, but yet I'm getting a lower high, I just don't know if price will stay range bound, if we will see further volatility contraction. Could be anything. I don't know. And for that reason, if I can't make an educated guess, I rather move on and pick a market where I can make that educated guess. Multiple time frames. I like to use that picture of a crime scene, and I'm the big inspector, and I'm coming in and I'm asking all my witnesses, and the witnesses that I'm asking are my time frames. And if everybody is telling me that the murderer was leaving the crime scene in a red Corvette with the plate saying ABC, then probably, yes, this is what it was. It should make sense for me to start looking for that red Corvette with the ABC number plate. Same thing here with the markets and the different time frames. I'm looking at just one market, but I'm asking several witnesses. I'm asking several time frames. What is the story that you can tell me? And if the 60-minute chart of a market, and it doesn't matter what the market is in those examples, everything that I tell you here and now is really applicable across all different markets and all different time frames. The agenda, the story always stays the same. What is it that I'm seeing on the 60-minute chart? I see lower lows and lower highs. And I don't have to go back to infinity here, just eyeballing this last section here, clearly lower lows and lower highs. This is a downtrend. Now I'm asking my next witness, can you confirm, or rather tell me what is it that you see? Not suggesting that he has to confirm something. So what is it that I'm seeing here? I still see lower lows and I still see lower highs. So my daily chart tells me exactly the same story as my hourly chart just told me. So both are pointing in that same direction. 1 hour chart is going down, daily chart is going down. So if I'm looking for potential short trading opportunities in this environment, this can make more sense to me. We can increase, once again, the probabilities, the predictability, and confirm the strength of a trend by analyzing higher time frames of the same market. So if I want to trade the 60-minute chart, it makes sense for me to have a look at the 2-hour chart, the 4-hour chart, 8-hour chart, daily chart, and so on. And the more time frames tell me the same story, the more witnesses tell me the same story, I appear, or probably it might be that I'm on to something here. Next thing, support and resistance. I don't like to use sloping trend lines. I'm just looking at horizontal levels of support and resistance. Why? Those are easy to spot and they stay the same all the time. It's easy for me to trade based upon those levels because they're not sloping, the values are not changing. And if you just want to have a live example of those horizontal lines of support and resistance in action, after the webinar, just pull up a chart of the Germany 30, the German stock index, the DAX, and have a look at with how much grace and dedication this market adhered today to the 10,800 level, which has been on that chart pretty much since forever. Pretty much since forever. Those stupid, simple horizontal lines are leading indicators. I am able to identify this line. Here maybe one touch, definitely the second touch here. At last, here is the third touch. And from this point in time going onward, I know that price has a decent probability to react to this price level once it approaches. And guess what? The next time price approaches, we bounce off. And we bounce off again. And price is once again pushing towards this level. I don't know if it will break through or not. I have to look at different factors for that. But at that stage, I just know that price will pay attention to this level with a decent probability and that I can reuse this level to formulate my trading strategy and potential entries or reversals. It's just one ingredient. How I will use it, this comes down to my strategy. And you see that this market is working as resistance here. Once we've broken above this resistance, the market is using that resistance as support. So support, resistance, it's all the same to me. I'm looking to identify horizontal levels in price where price has paid a lot of attention to in the past, because I think it might do so again in the future. Another very nice leading indicator are pivot points. pivot points take the previous time period, the data from that time period, to calculate values for the next time period. So if you are looking just at a daily chart, I can take the high, the low, and the close of yesterday's trading session, and I can use these 3 data points to calculate my pivot points for the next session. So it's a leading indicator. I just need yesterday's data to be able to draw the support and resistance lines and my pivot points accordingly for today's session. I only need today's data, and once today is done, I'm able to draw those pivot points and lines for tomorrow's session. And I can use that not only on a daily basis, I could also use, for example, weekly data. So I get weekly pivot points. I just need to have the data from last week, Monday to Friday, and I'm able to draw my pivot points for this week's Monday to Friday. Leading indicators, they give me an idea about the future. And the nice thing is, when you see how those points jump, why do they jump? Well, here the trading session was done and the next trading session started. The nice thing about those pivot points are, you see, those are on the chart up front, and the market closely pays attention to those pivot points. I don't know why that's the case. I just know that it is. And I'm a curious mind. I would like to know why that's the case. But in the first step, it's good enough for me to know that price really, it gives me an edge once more. It gives me an edge if I pay attention to my pivot points. And so paying attention to pivot points, using pivot points on a daily level, based on weekly data, based on monthly data, definitely can give me an edge for my trading. Once again, leading indicator giving me an idea about the future. Fibonacci retracements. I need a trending environment, and once I have this trending environment, I can easily draw in my Fib retracements. And I'm seeing that we are in an uptrend here. I see higher highs, I see higher lows. And now I just think that this candle here, we're just sitting here at that stage. I feel that this candle might be a swing point high. Why? Because the structure of this candle is a little bit, not a little bit, it's more on the bearish side. The market has rejected all this move to the upside. And so what was my previous swing point low? Here. And I assume that that could be the swing point high. So I'm clicking from my swing point low to my swing point high. And now I want to focus on the 50% and 61.8% retracement. And this is giving me my Fib buy zone. We are in an uptrend. I'm looking for a trend continuation, and I'm looking for a sensible buy point. And this buy zone here is what could give me that potential buying opportunity. And the nice thing is, once again, it's a leading indicator. I had to wait for this candle to give me an idea that this might be the swing point high. And now I knew 1, 2, 3, 4. I knew 4 candles in advance that this here might be a sensible, potential buying area for a trend continuation trade. Leading indicators, I don't have to wait for moving averages to cross each other and know it would have been good to have bought 4 candles ago. No, I know about 4 candles before we reach that buy point that this might be a good buying opportunity. Just because I get the pullback to this level, is this good enough for me? Absolutely not. Stacking probabilities. I want to see that several things come together and give me that potential buying opportunity, confirming that one. Once again, using that crime scene picture here or analogy, I want to have multiple witnesses suggesting that this might be a good opportunity. Same thing here in this downward move. I can see the market is making lower lows and lower highs. And once again, I assume that this might be the potential area here for a, I could assume that this is the point where where this move is coming to an end for the now and is about to pull back. Swing point high to swing point low. And here I see the price is about to pull back, and it helps me here 50%, 61.8, the Fib sell zone. We are hitting that Fib sell zone almost perfectly here, and price continues down lower again. And I knew upfront 1, 2, 3, 4, 5 to 6 candles up front, that this might be the sensible area for potential pullback. Leading indicators. The idea here is that I want to stack the odds in my favor, and I do this by combining all those different ingredients. We like to call this also, we're looking for clusters of those areas. So forming a support and resistance cluster, swing point low to swing point high. Let's draw in those fib retracements. First click, second click, and now we have this 50% pullback, 61.8% pullback, and the 78.6 could be used for a potential stop loss location. But personally, I like to put my stop loss behind the 100% pullback, but that's just as a side note. So yes, price hit that level, dipped a little bit further, and is about to move to push higher again. The nice thing and important thing to note here is it's not just that fib retracement here. I hope you guys can see that small dotted line, and this just means I do have also a pivot point sitting pretty much precisely at that price level. Does it have to be exactly the same price level? No, it doesn't. It should be very, very close, and this definitely qualifies it those. That one here, the red line and this red line, no, those are too far apart. That doesn't make sense. But here, that pullback area, very close, and also this one here around the 61.8, all those make perfect sense to me. Those are close enough. Happens to be euro against the US dollar hourly chart, pulling back to this area. Again, leading indicator, FIBs told me that this might be a pullback point many candles in advance. And my pivot points told me up front all the time that this might also be a sensible area. Now I have two things pointing at the same price level. Next thing to notice, I can also put in a support resistance line here. I can see that price has reacted to this level here in the past and there, and now we are about to push back again to the support and resistance price level. So now I do have three things going for me for the potential argumentation that price might be bouncing off of this cluster and starting to push higher. Guys, any questions so far? Let me just quickly, briefly. Yeah. Times are running a little bit short, but I think we're still good. So guys, quick reminder, if there are questions, that's what we're here for. Please ask those questions. All right, so next thing to note, I'm waiting for this pullback here. And now the question is, how could this be traded? I do have several different contracts available and types of contracts available for trading here at Nadex. I could be trading binaries, or I could be also looking into trading spreads. And remember, with spreads, it's always this idea, I want to enter a long position as close as possible to the floor of that spread, because then the spread or market price can't go that much against me. Remember, price of that spread is always ranging between the floor and the ceiling level. So if I'm entering at the floor level, the only thing is up. Worst thing that can happen is it moves sideways, it moves out of my range. But as I entered at the floor, my loss is definitely well defined and my upside potential is much larger. So from those different contracts available here for my trading, and unfortunately those numbers are very small, but you see here that the level is at 134.30. And this here is pretty much, the last one doesn't make any sense for me because we are 34.30, 34.60, where this would be entering so close to the ceiling. I have all the risk on that trade, but pretty much no upside potential. Next one, somewhat middle ground. However, this one here, up there, we're entering a little bit out of the money, so price has to move a little bit further to just hit that floor level. But apart from that, I do have all the upside potential here. So from this logic, applying this logic here, that would be the contract that we could be going for. And we see that price hit that level, moved a little bit sideways, and then continued once again higher for a trend continuation. Just reading a question here. Ken is asking a great question. And Ken is asking, how do you position in an uptrend when price enters the fib level in, say, a pivot level? Do you just buy or do you place an order in advance? Perfect question. Thank you very much for that one. You can do both. The question is, do you want to watch the charts and wait for this pullback to occur? If that's the case, then I would be waiting and waiting for this pullback. And once I see that the sweet spot is there, I would be picking the contract which makes most sense for me, and I would be just looking into entering that position. However, if I don't have the time, I have analyzed the markets before I'm heading to office or something like that, I would personally put in an order waiting there. And we have different ways to do that. Remember, you don't have to just push those orders to Nadex and have them executed immediately. No, you can manage your positions. You can enter with limit orders, and this is something that I would consider doing here as well. By the way, you can also close those positions with limit orders, just sitting there, just waiting. That's quite frequently that I get an email in the morning when I'm waking up, your position has settled. Obviously, I'm based in Germany, different time zone, and so I don't have to watch those markets. It's just watching, putting in those orders in advance. So you must be a little bit advanced to understand where the pricing of those contracts should be if price hits this level. For example, if I'm looking to buying a binary contract, I know that price, if that contract has a strike price round about this level, pricing of that contract should be somewhat close to 50. How do I know? Because an option, plain vanilla call option, trading at the strike price, at the money, should have a delta of around about 50. And this is also what the price of that binary call, of that binary option should be round about. So I can tweak this a little bit in my favor. So you can do both. Putting in those orders in advance requires a little bit of understanding and experience how the pricing works. This is what I usually tend to do. Or you could be watching the markets and then really just trading based on the current price with market orders and getting in there. But Ken, thank you very much for that question. All right, so let's move on here. What's the rationale of that method? The path of least resistance is usually in the direction of the prevailing trend. A strong trend gives predictability in the direction of price action. Once again, there's never a sure thing with trading, but a little bit more likely than not. Stacking the odds in our favor. Next thing, trends move in waves of buying and selling. Momentum as price advances and retraces. Identifying the turning points within these waves gives us lower risk opportunities to take advantage of the trend momentum. You don't want to jump in, you don't want to buy the market at any price. I want to have a good deal. Even if I think that prices are going up, I want to have a good deal. Overpaying for something doesn't make sense to me. So I'd rather wait for a little pullback. And with these leading indicators, I have tools to identify what this, I don't want to use the term fair price, but what this equilibrium price should be like. And this is my internal limit where I'm saying I'm willing to pay that much. I think this is fair. And once I pay that, once the market gets there, I want to enter. I'm not willing to chase the market. This is usually a bad idea. I know upfront what I'm willing to pay. And we aim to anticipate those turning points using clusters of multiple support and resistance. Strong clusters within strong trends often act as walls that price bounces off, presenting trading opportunities in the direction of the major trend. Let's have a look at an example. Identify market with strong trends across multiple time frames. Locate lower time frame clusters of support and resistance using historical support resistance levels, pivot points, Fibonacci, and the more of those things come together, clustering at the same price zone, the stronger the zone becomes. Enter as price pulls back to cluster level and trade in the direction of the major trend. And guys, this doesn't have to work. And therefore, it's crucial that I apply proper risk management and position sizing, which is very easy here on the platform. I can show you this in one of the next webinars. Risking, your risk exposure upfront, and I'm willing to risk for my personal trading about 1% of my account on any one given trade. And you see the risk upfront. It's very, very easy to match those numbers up. So let's have a look at this example here. We're looking at euro against the US dollar on a 4-hour chart. what is it that we're seeing here? I'm seeing a downtrend. I see the price is making lower lows and lower highs. I don't care about this area here. Just eyeballing the right side here is good enough for me to let me know this is currently in a downtrend. In which stage of that downtrend are we currently? Well, price is about to pull back. Remember, it's always this push and pull. Price is moving, price is pulling back. We have a level of support setting up here. This support is now turning into resistance. I know that this level is here, touches there and there. And once again, I can formulate an idea. Price is pulling back into this level. So dropping down in our time frames, the 4-hour chart suggests we are in a downtrend, and this might be looking interesting. Looking at the 1-hour chart here, same market, I can see that same picture, much clearer now. Price pushed from this recent low, recent high to the current low. And now I'm able to draw in my fib retracements. And I can start to see that the 50% fib retracement is sitting just on top of that support resistance level that we have just identified on the higher time frame. So price is pulling back into my moving average sell zone. Price is pulling back towards the fib sell zone. And now you can also see that this level here where we're pulling back to is also happening to be a pivot point. We're seeing the pivot point here. We see the level of support and resistance, and we see the fib retracement along here as well. And the pivot point, you can see that one going here with this green line. All those things happening at the same place. So the idea is price is pushing towards this level. Do I know the price will have to stop there? No, but the nice thing is it doesn't have to stop there. With conventional instruments, the question would now be, where would my stop loss go? Personally, I would put my stop loss here. However, with Nadex contracts, you know your absolute risk exposure up front. And if you position size accordingly, there is no need for a hard stop loss. I always do my positions in that size that if the trade is a complete loss, no worries, I'm staying within my risk parameters. Everything's fine. So I don't have to be worried about briefly being stopped out and then price continues in my original direction. I'm pretty sure we've all been there and really loved that situation. Here with those Nadex contracts, we don't have to do that. Position size accordingly, price hits our level, moves a little bit further beyond against us, but then continues in the original direction of the trend and is trying and shooting for my potential profit targets. The main takeaway here for today was really look at multiple technical indicators, look at preferably leading indicators over lagging indicators. And if things happen in a small area of price, if those techniques start to form a cluster, then probably certain setups around those clusters are more likely than others, stacking the odds in our favor. Guys, we're already over time. Very sorry about that. Obviously, we have much more time to focus on those things here during the Nadex Premium Trading Strategy course coming up, I think, in January. We can cover all those things in much more detail there. It's a 6-hour educational package presented by my colleagues and myself here at Trade Position over 3 installments. It's always done as live webinar. You guys, just like today, have the opportunity to ask questions. You can, of course, visit our homepage and try to sign up for that course for yourself. This is not a sales pitch because I highly advise that you guys don't do that. Just open an account here at Nadex, become a member of the exchange, and everything has been taken care of. Use this money that you would have spent on our course otherwise, fund your account with it, get started trading here at Nadex, and you get the same content. We're not holding anything back, so please consider opening that account and getting started there. Guys, while you might be typing your final questions, I have to thank you very much, not only for tuning in today and asking those questions, but also pretty much for tuning in for all of the webinars this year. That's my last webinar for the year here at Nadex. I had a blast throughout the year. Thank you very much. It's been a great experience. I had lots of fun. I hope it was the same for you guys. And yeah, I really would love to welcome you again next year here in that advanced webinar series, and also, of course, through our other webinars, market movers, and specific courses for those individual instruments. Thank you very much for tuning in. And yeah, Ken, thank you very much. Same to you, to all of you guys. Merry Christmas, happy holidays. I don't know what you celebrate, but I hope you have a blast and have a great start into 2019. Looking forward to seeing you guys then and there again. Thanks, guys, and bye-bye.